Welcome to the Bucket Plan on Demand, a podcast for financial advisors based on the best-selling book and process that simplifies financial planning. Hear from skilled industry professionals and special guests each episode that will help perfect your approach with clients and your results.
Thank you so much, and good morning, everyone. Welcome to another Coffee Break with C2P. So happy to be with you this morning. We are going to be talking about bulletproofing a bucket plan of steel, probably a very relevant topic given the somewhat recent market volatility we've experienced the last few weeks. A little bit of a roller coaster. We talked about obviously that in our last week's coffee break with some amazing guests. If you didn't get a chance to check that one out, but I'm gonna. I was the guest, so that's fine to say. My guest today, our guest barista today, really needs no introduction, but of course I will give him his due and his flowers. So obviously joining us, our guest barista today, the person who's going to be talking about bulletproofing our bucket plans of steel is none other than Dave Alison. Dave, of course, is a distinguished wealth manager, entrepreneur. He is a founding partner of C2P, and of course, a founder and CEO of his own firm, Alison Wealth Management. He's obviously a well-known thought leader in the industry, a specialist in serving high-end and ultra-high net worth clients. Well, Dave, let's dive back. Let's go back in time all the way back to 2024. You gave a presentation at our Mastermind Collegium called Bucket Plans of Steel, starting with the big picture. What does that mean? What does it mean to build a bucket plan of steel? And why do you think that's especially relevant in today's market environment?
Well, I'll kind of take a step back. That name came because we were doing our Mastermind Collegium in Steel City in Pittsburgh. Yes. So, what we were really referring to there was having training built for the client service associate or paraplanner on your team, or if you don't have that, you're doing it, to really kind of get the bucket plans built in the most efficient manner. I mean, I think kind of the one thing that always drove me nuts is that when I would get ready for a client, meeting, a deliver meeting, and I'd start maybe the night before because maybe I wasn't preparing as soon as I should have been, but I would start flipping through the plan deliverable and I would just kind of find errors or mistakes or typos or numbers wouldn't add up. So, what we started to focus on doing, and I got to give a lot of credit to David Roth, and he kind of co-presented some of this section in Pittsburgh with me, is, we started really building out some different, tools to be able to more efficiently get to that plan deliverable. And so, there's an entire e-learning course, and we delivered some of the information that's in the e-learning course in that bucket plan of steel presentation in Pittsburgh. But this is a course that your client service associates or your paraplanners need to go take. It's a plan design course. It's on the LMS. And, we walk through all kinds of efficiency tools to build accurate, detailed bucket plans out, whether it's an Excel file that David Roth created that really helps get, the numbers organized of how much is going to go into each bucket, coincides to how much is in each category of the pyramid of risk, all the way through, how we use Quanti in our portfolio analytics, how we use Social Security optimization software, how we use e-money in my practice, or, I know there's other financial planning software. So, really it was just this concept of like making your bucket plans ironclad for you to be able to deliver to the client, right? I think in today's market environment, obviously bucket plans of steel are that, they're holding up every time a tweet goes out and the market goes up or down 3 or 4%, and clients, are a little uncertain of the financial situation ahead. Obviously, when we're in a bull market, when we're in a market like 2023 or 2024, people don't really pay as much attention to their now bucket or soon bucket. But, I know the conversations I'm having with clients right now, every one of them is positive. Every one of them is positive. We know the later bucket's going to have some volatility. It's why we proactively set up a now bucket and soon bucket. It's why we talk about it every single year to make sure it's funded appropriately, that we've got it reloaded with any liquidity, cash flow, or income needs that you might have. And so, that's just really kind of the genesis of it, is making sure, that the deliverables are there. Because when clients open their Schwab statement, I mean, when I open up my Schwab app right now or my Fidelity app, all I see is one big pile of money. Well, moving up or down, right? I don't see how much my now bucket, my soon bucket, or my later buckets have moved. And, I think that's the importance of communication right now.
You mentioned, obviously the e-learning course, and then that, you talked about some of the presentation tools you use, Excel, eMoney, Acrobat, Adobe Acrobat Pro. How have you kind of streamlined that building process so there isn't those, because you're right. Like you get in front of a client and there's a typo and you see it in the meeting, that's like the worst feeling, right? Like you're like, crap, that's not right. Like so like, how have you really streamlined that process to have quality control, to eliminate errors, and using maybe these tools? Just maybe talk about the process a little bit more.
Yeah, I mean, I think, as everyone knows, I follow exactly what we teach at C2P with the advisor career path. I never go into a meeting alone. So, I always have, a second chair advisor in every one of these meetings. And honestly, like our plan deliverable creation starts even all the way back into step one, discover. Like I know David's told me multiple times that as I'm going through step one, discover, and we're both interacting with the client in that situation, he's already starting to get things organized into eMoney. We use eMoney as an organizational tool more than probably anything. Like, yeah, it's got really powerful financial modeling and Monte Carlo and analytics, but for us, that's where we're starting to centralize all the information. So as clients are providing details, like I know he's generally logged into eMoney, starting to add stuff in. And now with Zox as a note-taking service, it's capturing everything as well throughout the meeting process for us to double check everything. But, the workflow for us is he's generally starting to input that information. And now for some of the stuff, we already have it already. We have a lot of clients that provide statements to us even before a discover meeting. They securely upload it because we add them to what we call a file sharing folder in OneDrive, and we send them our requested documents checklist of stuff to start uploading to us. And so if we already even have it, he's got a lot of that stuff preloaded in. As we move into the design phase, the first meeting of design, we typically bring up eMoney on the screen and we show them every account that they have. We start there and walk them through and say, did we capture everything? We go to the income tab. We show them what their income is if they're currently working, or other sources of income if they have Social Security, pensions, rental income. We go to expenses. Now, we don't have their expenses yet unless they gave us that information in the Discover meeting, which generally doesn't happen. And I'll say, so as you can see, this is blank here. This is one of the things we're going to work on in today's meeting when we do a cash flow assessment. So, we're strategically kind of building as we go with the client throughout the meeting process. We do the first design meeting. We generally take a break after 60 minutes. That gives us, then a week or so to kind of financially validate or model things. If we need to do tax pro formas and Holistiplan, if we need to do a Social Security analysis, if we just need some time to take a break and think about what is going to be next in our kind of conversation and strategy, then we do our second design meeting, where we'll go through, the pyramid of risk. We'll interactively sketch out their bucket plan. We'll start to plant some seeds on strategy and ideas. And by the time that second design meeting is done, we pretty much have all the intel that we need, and it's in eMoney, and everything is kind of organized properly. And then, we created some tools that we utilize to then go build out their bucket plan deliverable. I think everybody knows the bucket plan template, which is that PowerPoint template. If you go into that e-learning, David created this Excel file that, at the top of it, it just shows how the client's accounts are set up right now and how much is in each account. And then down at the bottom, it shows where we're going to be moving it to. And we use Excel because I don't know about you, I've spent too many hours banging my head against the wall with a calculator, trying to just do the numbers and then write them into the bucket plan. We just use Excel so that everything adds up, and we round. We don't do, numbers down to the decimal point. I know that, is challenging for some more analytical advisors, but like for us, everything's rounded to the thousand. And so like it just tries to keep things simple and easy. And we then, build out that deliverable, and typically, I try to have, David send that to me a day or two before the delivery meeting where I can review it. And, it's a lot of times maybe 85 or 90% there. I might want to add a couple ideas or strategies to it. And, then we're off to the races. And so again, a lot of that is outlined. There's one specific course in that plan design where I kind of walk through that entire process from the Excel file to the PowerPoint. We saved the PowerPoint as a PDF. And then, our team has Adobe Pro that you can edit PDFs. That way, if we need to take a PDF of our Social Security analysis and drop it in, or take a PDF of the cash flow report or the Monte Carlo report from eMoney and drop it in, or a portfolio snapshot from Quanti, we drop it into that master PDF so that when I'm in a plan deliverable, I only have one document I'm working off of, and that's that master PDF. I'm not trying to fumble from, an investment statement to a Social Security statement to a Holista plan report. Everything is packaged into that one deliverable. It's like 70 or 80 pages. So I know where those pages are ahead of time. So I'm not fumbling through that one big document, but like that's the preparation that we go through to make the deliverable as efficient as possible.
Yeah, I mean, two key things I think you said there. One is the rounding. I mean, we've talked about this a lot in bucket plan training together. Like, the market's going to move every day anyway. Like, why try to get it down to the penny? It's just a fool's errand. And just keeps the numbers very simple so you can double check. But also, you mentioned that having somebody on your team, whether that's yourself, a CSA, paraplanner, someone that knows how to use Adobe, that knows how to use that kind of pro version, and can create those PDFs for you. Because I know when I was an advisor, that's what I did too. Like, it was so easy to just drag and drop all these different reports into one kind of consolidated, document. And then it's much easier to navigate that way.
Yeah, I mean, I just had this conversation with Conrad this morning. We were doing kind of a kind of quarterly catch up and review, recapping, progress from the first quarter. And, the thing I shared with them, every meeting you do alone, you're missing a chance to mentor somebody on your team, right? And you're probably doing work that's below your hourly rate. So like, have somebody in every meeting with you. I think it's huge, and they can then go do, and if they can get the work to 60, 70, or 80%, that saves you a massive amount of time. So, have the team members that you're continually mentoring and developing and that are in the meeting. I mean, I have 2 meetings later tonight. Carson, I know he's on this coffee break right now. He's in both of those meetings. And it's just such a big opportunity for him to continue to get exposure and mentorship. And then the reality of it is he can run with probably 80% of the stuff that comes out of that meeting to follow through with the client that, otherwise I wouldn't get to in a timely manner based on my schedule. Look, I could hardly show up here on time.
You were right on time.
I was right on time.
If you have any questions, obviously, for Dave, please don't hesitate to ask him, throw them in chat. I want to switch gears a little bit, but I'll give us a second just to see if there are any questions. And then I want to switch gears a little bit to talking about something we brought up last week, which was, kind of the bucket plan was really built for volatile market times, right? Like, that's kind of really when it proves its worth, so to speak. Can you talk a little bit about maybe some of the stress testing you do just up front with clients? And then, what do you do now in kind of these maybe more volatile times? Do you kind of go back and remind them of some of this stuff? Just kind of how do you approach, like, hey, we kind of planned for this. This was expected.
Yeah. I mean, listen, at the end of the day, I think you have to, kind of be a little bit empathetic. Like, I never planned for a global tariff war trade. Like, the reality of it is, like, every one of these big economic events, it starts differently, but it typically ends the same, right? As we zoom out a year, 2 years, 3 years from now, the global market is going to deliver to those who supply capital, and we're going to see positive returns, right? It's just we're in a very, uncertain and volatile time right now, and I think we have to acknowledge that. And I think you got to like right now have a balance of facts and data versus empathy, right? And so, you know, I share with them, hey, I'm concerned. There is uncertainty out there right now. The markets don't like uncertainty. Uncertainty drives volatility. But this is exactly why we set up the plan the way we did, right? We didn't know what was going to come. We didn't know there was going to be a global pandemic in 2020. We didn't know there was going to be a historic interest rate increase in 2022. We didn't know there was going to be the potential for a global trade war in 2025, but we were prepared. And I want to show you some of the work that we've done. And like right now, I am living in Orion and in Quanti. And I'm showing clients, I'm pulling up on the computer screen. Tonight, I have a review meeting with a client that, yeah, they're a little bit kind of worried about what's going on. They don't necessarily agree with the policies coming out of Washington right now. I've got a number of clients like that. And so, when I pull up Quanti and I show them that their soon bucket is only down about 2 or 3% for the year. And yeah, their later bucket, I just looked at the numbers, their later bucket is down about 8%, which is what we would expect when the market is down, 8, 9, 10, 11, 12%. But when you could sit there and say, this is exactly the reason why we have, in their case, they have like 250 or 300,000 in cash in their now bucket. And then they've got, about 2.5 million in their soon bucket that is only down 2 or 3%. And then they've got the remaining 4 or 5 million out in their later bucket. Like, I think that just gives people the assurance and the peace of mind. And then I take it another step further and say, it's not just about segmenting based on risk. It's also really important to be diversified. Remember over the years, we've had these conversations where you're always asking me like, well, what's the S&P 500 done? Or what's the NASDAQ done? Why are we in these international funds? Why are we in these emerging market funds? Let's take a peek at that side of the portfolio today. Do you know why the S&P 500 is down, 11%, and you're only down 8%? It's because we're diversified into asset classes that aren't completely correlated to the United States public policy, administrative policies, U.S. companies. For example, our international portfolio is up 8, 9, 10, 11% so far this year. And so we do think U.S. companies are going to figure out a way to weather the storm, which is why we're bullish on them for the later bucket. But it also stresses the importance of diversification. This is for some of our, ultra high net worth clients, we're looking at some of the alternative asset classes that we have in there that have been pretty good ballast to the portfolio as well. So I think just walking people through yeah, we didn't, nobody really could have predicted why this event was triggered, but we know these events frequently happen, and it's exactly why we have the bucket plan set up. And then it's talking to them about, do we feel there's any modifications we should be making? And I'll share with them, for example, I've got a lot of clients right now who are bullish. They love the idea of buy the dip. I'm in that camp. I mean, I borrowed all the money out of my cash value life insurance policies and I've got it ready to deploy, right? We've got clients that are giving us cash right now on a regular basis to think about where we deploy that. Doesn't mean we have to go deploy it in the later bucket. I mean, even the soon bucket could be a place to just refuel some of that cash. But I'm talking to them about, do you feel like we should be making some, changes, or are you comfortable with how we have things set up today? Or are you uncomfortable? Meaning, the reality of it is, some of the conversation I'll have tonight is if the client's uncomfortable with the outlook, I'll say, look, we've had a rally over the last 2 or 3 days. Maybe if you felt so uncomfortable that you're not sleeping well at night, we should take some out of the later bucket and move it into the soon bucket. At the end of the day, we're only down 6, 7% in the later bucket. If we look over the last 12 months, we're actually up 4% in your later bucket. So we're still near all-time highs in your later bucket. Maybe if you're feeling that uncomfortable, we should reallocate. And I know, Kalem, we talk about that a lot, is I don't necessarily actively manage the investments. Like if clients are like, based on tariffs, what stock should we be in or not be in? I'm like, who knows what's with the uncertainty going on right now, we're one tweet away from any asset class substantially moving up or down. So I don't know, but what I do know is we could actively manage your plan. If you want to go more risk on and buy the dip, we can redeploy. If you want to go risk off, we can take some gains out of the later bucket and reallocate into your now and soon bucket. And now's the time to be doing it.
Makes total sense. Again, I think the key thing there is perspective. You mentioned like just kind of keeping that broader perspective. You look back a year, where your accounts, they might be down year to date, but are they down, going back even 12 months? Question in the chat is, do you provide a one page or some sort of deliverable to show the different recommendations?
With those clients, I mean, we're doing the exact plan deliverable. I mean, there's samples of it. So it's not a one pager. It's like, there's a couple key pages in it. Of course, the bucket plan, the asset transition. But I'm using that exact deliverable in all my step 3 meetings when I'm delivering the plan to get them to move their assets and come on over.
Question from Charlie. Noah said, thank you. Is there an Orion performance report that breaks down by sleeve? Ironically, we were just meeting on this morning. So
right now we're working on a performance report that'll give the breakdown by sleeve. But in the software itself, I pull up the screen share, and in the software itself, you can go to, the entire household, and you could drop down and break it down by sleeve. And that's typically how I have these interactive conversations with clients. The other thing that we're doing a lot of is, and I've shared this in a number of meetings, like I don't have the time to try to meet with every client now, but I want every client to know I'm thinking about them and that we're on top of this. And so what I am doing is Loom videos where I'm pulling up Orion and I'm doing a video and saying, hey, Kalem, like, I know you're probably watching the news. There's a lot of uncertainty. Markets are going a bit haywire. I just want to let you know we're on top of this. This is exactly why we set up your plan the way it did. None of us like seeing our account balances go down, but I want to give you a little perspective of stuff me and my team are watching. And I'll have a screen capture of Orion, and I'll say, so look, big picture, if we look at your total portfolio value with us, we're down about 6% for the year. If we look over the last 12 months, we're still up about 3 or 4%. I totally anticipate a lot more volatility over the next 30, 60, 90 days, maybe even through the end of the year. But we don't want to make knee-jerk reactions right now because I think we have an overall good plan and strategy. Now I want to walk you through and show you remember those assets we allocated in your soon bucket? As you can see here, net of all fees and expenses, those are only down about 2% for the year. And then your later bucket, as you can see over here, these are down about 8 or 9%. You've probably seen on the news that the US market isn't doing as well compared to international markets. Just for you to know, we have about 30% of your portfolio allocated to international. The other 70% is still allocated to really good, strong US companies. I know these tariffs are causing a lot of uncertainty. Companies are coming out saying they can't even provide forward guidance because of the uncertainty. But what we do know is in any uncertain environment, these companies tend to figure out ways to navigate it. They have very smart people working there. They're going to figure it out. The volatility will ease over time. And again, I feel really comfortable about our allocation and how things are set up. I'm more than happy to do a Zoom meeting with you if you think there's any adjustments or changes, whether it's maybe being a little more aggressive while markets are down, doing things like Roth conversions, or maybe you are, not sleeping well at night and you want to de-risk a little bit more. Feel free to let me know if you want to have a meeting. And like those videos could take 5, 7, 10 minutes to do, and you can send them out and they're personalized. They're the client's real money, their real holdings.
Obviously you're aware we're rolling out Salesforce. They've actually started that process. And we're actually going to have also some additional widgets, for lack of a better term, inside Salesforce that'll have kind of performance reporting as well. So
It's going to be a game changer.
we got a lot of really cool stuff coming. So it's I think by the end of the year you're gonna be able to have exactly what you need for clients. But even before that, we're working on a lot of the reporting stuff. So we'll be able to deploy that soon.
Yeah, and it's there in Orion right now. It's not in a PDF. It's just kind of on the screen. And then the other thing I share with clients too is like, for those of you, you can set up your clients with the Orion portal so they can go in and they can see down to, how their different accounts are moving and things like that. So, I've had some clients that are like, hey, how do I see this? And I'm like, oh, let me get you a portal set up and you can see these detailed analytics if you so choose. So you can work with Ryan and the ops team on that.
We are coming to the bottom of the hour. Just a couple minutes left. Dave, any other kind of, you've shared a lot, obviously, of things that you're doing right now, both with existing clients, with prospects. Is there any other things you're doing maybe slightly differently right now, just given the economic uncertainty? Or are you just still kind of, doing the same presentation, doing everything very much the same way, especially for maybe newer prospects, not existing clients?
Yeah, I'm not really doing anything too different. We're just, kind of continuing to educate. I think, giving people options, like especially if they have cash, should we go all in? Should we dollar cost average? Should we do a blend of the two? I think now is a good time to have people, like, it's a gut check, right? If over the last 3 weeks, 4 weeks, 5 weeks, like you're fearful of your portfolio, then we probably need to make some changes. Maybe we should redo your volatility tolerance analysis. Let's get some updated scores. You told me that if your, soon bucket fell, more than 15%, you'd feel uncomfortable. Well, your soon bucket's only fallen 3%, and you're telling me you're feeling uncomfortable right now. Maybe we should, make some changes. Maybe we should, put some more defensive positions in place. Maybe we should put some more hedged strategies in place. I'm talking about hedged strategies a lot. We're opening up accounts with Spider Rock. We're using options trading as hedge strategies. I talk about indexed annuities as hedged strategies. Again, so like if clients are feeling some of that volatility, I talk to them about maybe putting a hedge in. Maybe we, put some more downside protection in their plan. We're doing a lot more with, innovator and defined outcome ETFs with the Valor Volatility Buffer 30, or just like a combination of even that Bolt fund. So, there's a lot of options to educate people on. But I also want to let them know, like, let's not make a knee-jerk reaction. And, again, I think there's a lot of people that, have very strong emotional feelings right now, one way or another. And so, I think we all know sometimes it's best to try to keep emotions. As I gave in our I think most of us probably saw our market intel report I recorded like a week or two ago and sent out for client use. Like, I've never seen a time when politics and markets are more intertwined, right? We try to say like politics don't impact markets. Like, politics impact markets right now. They're intertwined completely.
Yeah, posting impacts markets right now. So
Yeah.
It's kind of a crazy world. Well, Dave, thanks so much. Obviously, everything you provided today is just incredible, and just always great to hear kind of what you're doing with your clients. Again, Dave, thanks so much for being our guest barista today, and thank you all of you for joining us. And we will see you next Thursday for another coffee break.
Thanks for tuning in to the Bucket Plan on Demand, brought to you by C2P, an organization whose purpose is to educate, train, grow, and support holistic financial advisors so families can achieve true prosperity. Subscribe today for the latest episodes and insights. Visit c2penterprises.com to learn how we can help support and enhance your advisory business. At the time of delivery and any subsequent publishing, information was deemed reliable, but is subject to change by the time of listening or viewing. The contents of this piece include options and projections of C2P, are subject to change, and are for informational purposes only. The information provided in this presentation is not intended to be individual investment, tax, or legal advice.